Welcome to the Business Finance Bulletin, episode 277. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, Xero Enhancements to streamline managing finances, sole trader versus limited company borrowing, and business confidence bounces back. Let's open this week's bulletin by taking a look at a series of enhancements that have been announced by Xero, the online accounting software provider, to its suite of products and services. Now, certainly the small business owners that we deal with when it comes to raising finance, it does seem that Xero is almost now becoming the default accounting package that businesses are using. So what have Xero announced? Well, they've announced a series of collaborations with third-party service providers. First of all, TransferWise. Now with this link up, instead of making individual supplier payments via TransferWise, you can bulk them all together and essentially just make one payment. And with the link up with Xero, it means now that is all integrated into your accounts. Also, they've announced a link up with Stripe and Go Cardless, so you can now take card payments and again automatically integrate that in with your Xero information. It also means you can set up direct debit and make installment payment plans for your customers as well. Also via Go Cardless, you'll now be able to set up direct debit for international payments, something that even the high street banks would struggle with. In a separate announcement, NatWest have also announced a link up with Xero in respect of their Rapid Cash service. The Rapid Cash service is essentially an invoice discounting service where up to a maximum of £500,000 you can get immediate cash advance against invoices that you input into the system. And again, with this linkage now with Xero, everything is uploaded automatically. So it's really good to see Xero really pushing the edge when it comes to innovation. All this is designed to help making managing finance that much easier. An interesting survey caught my eye this week, carried out by the FSB, the Federation of Small Businesses, as part of their regular Small Business Index survey. They took a look at experiences of raising finance between sole traders and limited companies. Now, the survey found out that there is a big difference in regards to the trading entity that you operate under. So in quarter 3 2019, for example, 7% of those responded who were sole traders said that they looked to raise finance in quarter 3. That compares to 13% for the whole business community. So you see a big difference there. Also, when it comes to the success rate, if they got a yes, well, 59% of sole traders said that they got a positive response from their bank. Compare that to 70% for everybody else. So you can see it's a big difference. Why is that? Well, obviously we deal with both sole traders and limited companies when it comes to raising finance. And the key differences that we see, well, limited companies are better prepared in terms of information they have. They typically have manager information, kind of a business plan ready to go, and a lot more information about the business and their future plans. Sole traders, less prepared. However, the big difference, though, is in terms of appetite for the bank. They can take more security when they're lending to a limited company. So where a limited company is concerned, the bank can take a debenture. A debenture is a legal charge over all the assets within the business, stock, debtors, fixtures and fittings. They can't take that from a sole trader. So you can see that's the big difference. So if you are a sole trader looking to raise finance, just think about it. Be prepared, get a plan together, get your accounts together and get your management accounts together to make sure you improve your chances of getting that yes. Don't forget, if you need to chat anything through, by all means, just drop us an email, info@businessloanservices.co.uk, and we'll happily review the deal with you. Let's close this bulletin by taking a look at business confidence. Now, during most of 2019, perhaps for obvious reasons, business confidence has been quite flat, if not negative. However, it does seem that in October and parts of September, there was a little bit of a bounce. Well, first of all, took a look at a survey carried out by Lloyds Bank as part of their monthly barometer series, and Lloyds Bank found that business confidence in October did improve. There was a little bit of a bounce back. Over the last 3 months as well, negativity about the impact of Brexit also declined. Previous 3 quarters, 43% of businesses said the economy would be negatively impacted by Brexit. Well, in October, it only said that 37% of businesses said it would be negative. So a bit of an improvement. So it really does kind of confound where we are at the moment, and very much yo-yoing, up 1 month, down the next, up 1 month, down the next. Now, interestingly as well, about appetite to borrow money, the latest figures from the Finance and Leasing Association for volumes of business written by the asset finance sector in September also showed an increase. There was an increase in volumes in that month, September, compared to September 2018, an increase of 5%. Also in that previous 3 months, there was also a 5% increase compared to 3 months in October 2018. Now, in Business Finance Bulletin 274, I mentioned that the asset finance sector seemed to have now been hit by negativity, with essentially 0% growth in volumes in August. And that also seems to have been bouncing back. So lots of mixed messages out there as we come to the close of 2019. Obviously, we're facing an election and perhaps a new Brexit deadline looming as well. So I think this yo-yoing is going to go and continue certainly for the rest of this year. Well, that's it for another Bulletin. As ever, I hope you enjoyed watching it. And if you did, please don't forget to give it a like and a share. So that's it. I look forward to being with you next time. In the meantime, have a great, successful and profitable week.